Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Artisan Partners Asset Management Inc. quarterly report. Artisan Partners Asset Management Inc. offers a wide range of services to various clients. The company provides investment management services to pension and profit-sharing plans, trusts, endowments, foundations, charitable organizations, government entities, private funds, non-U.S. funds, mutual funds, collective trusts. The firm manages separate client-focused equity and fixed income portfolios, investing in public equity and fixed income markets globally. The stock price of Artisan Partners Asset Management Inc. has increased by over 25% in the 6 months leading up to October 2025 due to several positive news developments. Strong earnings reports and dividend declarations have been a significant contributor, with revenue increasing by 14.02% and earnings rising by 17.31% in 2024. The company's assets under management, AUM, reached an all-time high of $181.3 billion in Q3 2025, driven by investment returns and revenue growth. The leadership transition to Jason Gottlieb as CEO was also seen as a positive move, maintaining the firm's investment-first culture and expanding its platform. Industry recognition, such as Brian Krug winning the U.S. Morningstar Award for Investing Excellence, has further boosted confidence in the company's performance. Analyst sentiment has also been optimistic, with an upgrade to a Zacks rank number 2 by and a 6.4% increase in the Zacks consensus estimate for fiscal year 2025 earnings. Analysts have set an average price target of $46.20, forecasting a potential increase of 6.43% over the next year. These factors collectively contributed to periods of stock price appreciation for Artisan Partners Asset Management Inc. over the past year. The primary drivers of revenue growth for Artisan Partners Asset Management Inc. can be attributed to several key factors. The company's management fees have seen a significant increase, with an 8% rise in the 3 months ended September 30, 2025. Additionally, investment advisory fees have also increased by 9.6% during this period. Furthermore, the average assets under management, AUM, has risen substantially, contributing to revenue growth. The company's ability to attract and retain assets has been a major driver of revenue growth. The weighted average investment management fee decrease has actually contributed positively to revenue growth, despite its name suggesting otherwise. Distributions to limited partners have also increased, indicating a growing pool of investors benefiting from the company's services. On the other hand, revenue decline can be attributed to a few key factors. A significant decline in performance fees has resulted in a 37% decrease, contributing to overall revenue decline. Net client cash outflows have also had a negative impact on revenue, with a net outflow of $2.3 billion. Net income and profit margins. A shift in trends. The financial summary reveals a mixed bag of changes in net income and profit margins for the company. While there are fluctuations across different periods, some trends emerge. Initially, net income decreased by $18,712 in Q3 2025 compared to Q3 2024, and by $2,341 YTD 2025 compared to YTD 2024. However, a closer look at the 9-month period shows an increase of $34,959 in net income. Profit margins also experience changes, with the effective tax rate increasing from 19.9% in 2024 to 24% in 2025 due to the OBBBA enactment. This contributed to a decrease in profit margin. Additionally, payments under tax receivable agreements, TRAs, and market conditions affected net investment gains. The operating income margin decreased by 1% from 32% in 2024 to 31% in 2025. These changes indicate that the company is navigating complex financial dynamics, with various factors influencing its bottom line. The company is generating a significant amount of positive operating cash flow, with a total of $249,238 reported for 2025. This indicates a strong financial position and ability to cover its operational expenses, providing a solid foundation for future growth and development. The company's debt level has undergone significant changes over the past period. While total liabilities have increased by a relatively small amount, gross borrowings have decreased by $11,000, and fair value of borrowings has decreased by approximately $19.1 million. This suggests that the company may be reducing its reliance on debt. However, interest expenses have shown mixed results. For the 3 and 9 months ended September 30, 2025, interest expenses increased by $0.1 million from the previous year. Additionally, interest expense for the 9 months ended September 30, 2024 was unchanged at $-6.5 million. Overall, while there are some fluctuations in interest expenses, they have not changed significantly overall. Management is optimistic about the company's outlook, citing long-term investment performance as a key driver of business and financial results. They plan to maintain and evolve existing strategies while launching new ones that meet client needs. The primary cause of changes in operating results will be fluctuations in assets under management, AUM, influenced by factors such as investment performance, client asset flows, and industry trends. Management expects majority AUM growth through investment returns and plans to manage diversification and capacity by closing or reopening strategies as needed. Additionally, they anticipate the investment portfolio to continue growing, with a focus on granting additional franchise capital awards and making seed capital investments in new strategies and vehicles. The company has a history of paying dividends to its shareholders. For the 3 months ended September 30, 2025, the dividend per share was $0.73, while for the 9 months ended September 30, 2025, it was $2.75. The total amount paid in dividends for 2025 was $194,689, a significant increase from the previous year's payment of $164,026. That concludes the financial summary for Artisan Partners Asset Management Inc. Feel free to comment below, and I will be happy to answer them when possible.